Markets are telling the Fed right now at this hour to take a hike, and we don't mean hike as in rate hike. Look at this. This is an up-to-the-minute read on the very latest Fed funds futures bets. This number tells us that right now the market is pricing in just a 4% chance that we would see a rate hike in June. By the way, I checked it this morning. It was 7%. It continues to fall. Right now, 4%. We'll keep an eye on it. But what's the reason for the walk back? Well, job growth came in well below street expectations for the month of April. 160,000 jobs, non-farm jobs, were created. While that is the 74th month in a row of job growth, and that's good, we need to give you this data point from the report. The labor force participation rate, meaning people who are out there actively looking, slipped 0.2 of a percentage point to now just 62.8% in April. That's down from, I guess, a two-year high of 63%. But overall, such low levels, you'd have to go back to the 1970s to come close. Hourly wages did rise 8 cents this past month, but that still remains about a 2% range level, which I guess since the recession, why most Americans don't feel as confident in the economy as economists do, because they're not making a lot. There's general agreement that a 3% annual gain in average hourly earnings was really kind of necessary to lift inflation to the Fed's 2% target. Wages, by the way, have not risen more than 3% annually in 7 years. So what happened? After the number came out, the president faced the media this afternoon and acknowledged the numbers are not where they should be, but he did come up with 2 suggestion solutions: hike the minimum wage and make corporate tax rates fairer. But we're asking, how will that encourage employers to step up hiring now? Joining me now, Secretary of Labor Tom Perez. Welcome, Mr. Secretary. Thank you for joining us.
Good to see you again, Liz. Long time no see.
I know it's been a while, but we saw this number and we said, wait a minute. It's you know, the last 2 months were downwardly revised. Then we got a miss here, and I'm having trouble seeing it, especially, you know, the suggestion about minimum wage hikes. Yes, that will put money in people's pockets to ostensibly spend more. But I was just with Berkshire Hathaway's Warren Buffett, and even he says hiking the minimum wage would actually hurt job creation.
Well, we've only studied that issue about 280 times and debunked that myth. And, you know, go to the state of Washington. Typical example. They've had the highest minimum wage, state minimum wage in the country for something like the last 20 years. I think it may change this year with some of the other state actions. But you have a wonderful laboratory there, and they have no tip credit. And so look at the experience there. If the rest of the nation had Washington State's job growth numbers over the last 20 years, our economy would be even better off. And so this hypothesis has been debunked with regularity. And here's what I hear most frequently from businesses. What do you need most to expand your business? And the most frequent answer I get is customers. And 70% of GDP growth is consumption. When you're making $7.25 an hour, you can't consume anything because you don't have enough money in your pocket. That's why Henry Ford doubled the wages of people on the assembly line over 100 years ago, because he understood that you need to do that. Well,
he did do that, and people often go back to that history and data point, but you also now have businesses who are I guess, tripped up by a lot of regulations, so I'm sure that would help. But you've got to tell us, what is holding these companies back? Aside from, oh, my customer doesn't make as much, because, again, we have seen very kind of anemic job creation, job wage growth, but also this participation rate, Secretary, is dismal.
Well, let's look at that. 6 months ago, I had identical conversations when the labor force participation rate went down by the identical amount, and they said it's on a cataclysmic slide downward. And look at where we were now last month. We went up to 63%. We went down this month. But here's why I have continuing optimism, because we continue to see tightening labor markets. We have annualized wage growth in 2016 of 3.2%. That's better than last year. It's not where we want it to be. And then you look at not only the job numbers, and by the way, last year was our second best year, and we had 2.7 million jobs created, and there were 3 months under 160,000. So you and I have spoken a lot about 1 month doesn't make a trend.
Yeah. Okay. But now we got.
Really
I just want to point out that we did have the downward revisements of March and February.
But again, and we'll have upward revisions next month in all likelihood. So it's. But I mean, I think you have to look at trend data. Over the last 6 months, we've had 220,000 jobs on average. Last year, we had 3 out of 12 months that were 160 or less. Every time I would come on and people would say, the sky is going to fall because we had 1 month that was below expectations. Here's a data point that, unfortunately, people don't talk about. You look at not only the number of jobs being created now, Liz, but who's getting them. And that is very heartening to me, because the percentage of long-term unemployed, long-term unemployed as a percentage of the overall unemployment rate is now the lowest it's been in 7 years. And 2/3 of the reduction, roughly, in the unemployment rate over the last year has been from the ranks of the long-term unemployed. What does that tell you? It tells you that employers are seeing tight labor markets. They're looking in places that they didn't look before. They frankly should have looked before, but they didn't, and they are now. And
there's a change.
And for me, that's very heartening, because that tells me that labor markets are tightening. That gives leverage for workers, and that means that we'll continue to move in the right direction.
I have to ask you, only because the Twitterverse is heating up, Mr. Secretary, might you be seeing a job change? Your name has been floated as a possible running mate suggestion for Hillary Clinton if she does get the nomination. If asked, would you take it as Vice President?
Well, I have not spoken to anybody about that, and you know what I deal in? I deal in the reality that I have 259 days till the weekend. I'm not counting the days. I want to make every day count. And all the questions you're asking me today about the job numbers are very important questions, and I want to make sure every single day I have left in this job, I'm working my tail off to make sure that everybody who wants a job can have a good job that pays a decent wage.
Okay, but it's a nice residence. The VP residence is nice, I hear. So, you know, you never know, Mr. Secretary. Thank you so much.